morning. You're watching Business World Live. I'm Danie Laurel. It's 10 a.m. this Tuesday morning here in Metro Manila. We are about 30 minutes into this trading day. Let's go straight to our top story. There's no reason yet for another rate cut. This is according to Central Bank Governor Ben Diokno, noting that monetary policy works with a lag and that recent adjustments have yet to be digested by the markets. In a TV interview, Diokno said keeping rates unchanged for the rest of the year is a possibility. The Bangko Sentral has slashed rates by a total of 175 basis points just this year, the last cut taking place last June. Diokno added that the recent steep contraction in GDP is temporary and will not affect the country's macroeconomic fundamentals. The next policy meeting will be on August 20. HSBC, on the other hand, sees the Philippine economy shrinking by 9.6% this year due to the impact of COVID-19. This is worse than the government's outlook of a 5.5% contraction this year. The British banking giant noted the continuous rise in infections. HSBC added that the lack of a big-ticket stimulus plan could dampen recovery in the year ahead. The government has projected an 8 to 9% rebound in 2021 as top officials bank on a possible COVID-19 vaccine to be available as early as the year's end. Let's kick off the market with some good news amid all of the bad news. You can see on my screen here, at least the Bloomberg terminal is showing that our local currency has strengthened to 48 levels. You can see that 48.952. This, of course, comes on the back of the strengthening of the peso already yesterday. Just as I mentioned, Benjamin Diokno of the central bank signaled a steady policy stance. It was already the strongest close in more than 3 years yesterday. Apart from this, there's also a policy meeting set on August 20th. This is the strengthening ahead of that policy meeting. A lot of traders having already priced in the comments of the central bank governor. So there you have it, guys. Peso quite strong in more than at least 3 years. Now let's move on to markets, especially opening on the global foot here. You can see that the Dow Jones has actually jumped by 1.3% yesterday. The S&P 500 as well up 0.3%. Earlier on, it had actually was reaching its all-time highs there, but did pull back a touch. Nasdaq closed in the red, down 0.4%. But if you take a look at Asia, it's actually now starting to rally, at least over in Japan. It's up by 2% for the Topix as of 9:45, 1.5% up for the Nikkei 225. Check out the Hang Seng, that's up by 2.2%. Yesterday, it had suffered several losses. There are a lot of geopolitical issues when you talk about the U.S. and China. In particular, investors are assessing the simmering tensions between the two countries, as well as, apart from the U.S. having the stimulus plan in place, at least the progress in talks between the Democrats and the Republicans, there's still a lot of issues when it comes to China. The U.S. had mentioned that it will sanction 11 Chinese officials, including Carrie Lam, over in Hong Kong, and China has now said it will sanction 11 Americans in retaliation. So there's a lot of things going on, but you can see how Hong Kong has actually recovered from the losses of yesterday, and China as well is trading in the green. Now, I just wanted to take a quick peek at oil because we haven't taken a look at that for quite some time here. You can actually see that oil gained the most in almost 3 weeks. So that is now trading well above 40. You can recall that during the height of the pandemic, that V-shaped drop here, when oil futures were actually in the negative territory, negative $40 a barrel. It's actually now in the positive 42 a barrel territory, and this amid the fact that Saudi Aramco said that demand will continue to improve, and the traders are now betting on U.S. stimulus to help ease the pain in the economy. So let's move on over to our domestic markets and see how the PSE is trading, at least in the first 30 minutes of trade. Take a look at that. 5,935.26. That is up, or generally flattish, up by 0.07%, but at least extending the gains that we saw yesterday. Finally, we actually saw yesterday. I'll pull out the 3-day chart for you guys so you can actually see those gains, we finally saw the markets advancing the most in 3 weeks yesterday. We were up by 1.5% after having ended last week in the red. Last week was the fifth straight week in the red. So traders are asking, is this going to be a week of reversal? We'll ask our analysts later on about that. But yesterday's jump was actually led by Ayala and SM's property units. More than half of the points of the gain from the index actually came from them. Phil Stocks was saying that investors actually picked up these property equities after it had posted the biggest loss last week. It was down by 3.5% last week. Rachel Cruz of AP Securities had also mentioned that some investors went bargain hunting, especially on the bets that the earnings have already bottomed out. They're picking out the safest names, but there's still the question of very low volumes here. This also, according to Rachel Cruz, there's not a lot of confidence, plenty of uncertainty. Luis Sumlingan of Regina Cap is pointing towards the fact that bargain hunting spilled over because in the US, they had this employment report showing the economy added 1.8 million jobs in July. That's a third straight month of improvement, but that is still, of course, very far from the 20.5 million jobs Americans had lost in the month of April. So as you can see here, reactions possibly because of bargain hunting there, but still very thin trades. Yesterday, just around 4.5 billion pesos worth of shares, and foreign investors continuing their exodus. We lost around 714 million pesos from our foreigners net. That's a second straight day of losses. Now, I want to take a look at some stocks that were moving in yesterday's trade and how they are faring in this morning's open. Let's take a quick peek at Semirara. Semirara, which is actually set to be deleted from the index. You can see on my terminal here that was slumping yesterday, so it tumbled as much as 12%. It settled at a slump of 8.2%, the most since March 19. That's now actually recovering a little bit, but way far from what it was trading at earlier on. That's up by 1.3%. This, of course, comes amid the announcement of the stock exchange that they will be replaced in the index by Emperador. So let's take a quick peek at those stocks of Andrew Tan. You've actually got, apart from Emperador soaring because of its its future inclusion in the bourse. Let's take a quick peek. It is now paring back those gains down by 0.8%. You've also got Alliance Global, which is continuing its ascent. It's now up by 3.5% after having risen already 4.5% yesterday. This after its Mega World unit bought 6 million shares in the company at an average of 5 pesos and 50 centavos. They said that they bought that on August 7th. So it's actually trading at 6 pesos right now, which is still higher than what they had offered than what was offered by Mega World for a Mega World also was gaining yesterday, and it's still continuing that ascent today. So a lot of good news here, at least for those Andrew Tan stocks. Let's take a quick peek at telcos. This has been in focus since the penultimate sauna of President Duterte last week, and he did again reiterate that in his address yesterday late evening. We've been watching these players, especially given the fact that President Duterte was saying that they needed to improve their services by Christmas time. And now you actually have DILG Secretary Eduardo Año saying that the local government units have immediately approved over 1,000 applications from telecom companies to build new cellular towers. So they cut the processing time for telco permits to 16 days from the previous 240 days. So now only 428 out of 1,930 permits are pending. So most of them have already been reviewed, and this is according to a briefing last night. So if you take a look at that, PLDT up by 0.4%. Globe, however, is down by 1.5%. I'm still not done, guys, because a lot of earnings to be digested today. Let's take a quick peek at Eagle Cement. You can see on your screens here, not a very good picture, losing momentum here, profit falling for the first half of the year in particular. Their second quarter net profit down by 92% to 128 million pesos. That's on the back of sales down by 73% year on year. That brings their first half net income down by 61% to 1.3 billion pesos. Of course, they had said that this was all due to the fact that restrictions were in place in the construction sector. So again, the sales were watered down because of the fact that they could not, of course, construct. The shares in Eagle Cement had actually already fallen by 2.3%. It's still continuing that downtrend, down by 0.2% to 9 pesos and 98 centavos. Another player to be watching out for here, which is also in the construction space, DMCI, which has also released their earnings. Recall that we had seen the earnings of Semirara already come out, and this is their parent company, so it's not really a surprise having seen those Semirara earnings. DMCI Holdings income down 69%. That's on the back of low market prices in coal. This is the first half net income, and the second quarter net income at 1.4 billion pesos is also down a hefty 62%. So they have been saying that they've been severely affected by the local, low market prices, even as they actually have several units that were still resilient. In particular, DMCI Power was up by 10% in terms of second quarter net income, and DMCI Mining as well up 6%. But if you take a look at the biggest lion shares, you've got Semirara, you've also got the homes unit of DMCI. That homes unit profit share was down by 97%. However, markets possibly having already digested that, actually rallying for DMCI shares, that's up by 3.7%. And finally, I just want to take a quick peek at the other builders while we're on the topic of construction, because there's this interesting report on Business World, which had actually interviewed several of the big guns here in the construction space and how they've been doing amid this pandemic. And the picture is not very nice. You've got, for instance, EEI Corp. So that is one of the biggest construction companies that employs around 24,000 workers. They said they have resumed operations, but with very limited manpower. They said a lot of their workers have returned to the provinces. Some workers they've interviewed had said that they need to pay at least 2,000 pesos every time to get tested just to be able to work, and they'd rather be using this money and feeding their families. Recall that this comes on the back of 400 workers last month having tested positive in Taguig for the coronavirus. Right now, they said that they have since recovered. That's according to the mayor of Taguig. But still, the construction sector has declined by 33.5% the second quarter. So there's a lot of issues going on here. It's around 6% of our GDP. You've also got DM Wenceslao as well, saying that this year is definitely challenging. That's according to Delphin Wenceslao. Aboitiz Construction as well has said that in the short and medium term, a number of projects have either been deferred, delayed, or canceled. That's according to their president. So a lot of things going on here for the construction space. And finally, just to end this report, on one particular stock to be watching out for, that is GMA, because they have said that they will be buying their PDRS. So that is, of course, the deposit shares that foreigners could actually own in the media company. So the GMA 7 ticker, you can see on your screens here, will be buying the GMAP. So very interesting here that the prices are very, very close together. But again, the GMAP is the one that can actually be owned, depository shares, by some foreign investors. They'll be buying that. GMA is right now on a trading halt until 10:30 a.m. So more on markets later on in the broadcast with First Metro Asset Management's Edser Trinidad. All right, guys, let's check in on other headlines that we are watching this Tuesday morning. Business leaders have started reporting gradual recovery in their sales. That's according to Finance Chief Sonny Dominguez. Dominguez said the slight recovery in sales coincided with the partial reopening of the economy last June. Dominguez said recovery has also been evident in the import volume and the value-added tax data for the month of July. Both the Bureau of Customs and the BIR surpassed their target collections in July. That's after months of strict lockdown hampered most economic activity. Dominguez said government is now trying to keep a balancing act between containing the virus spread through stay-at-home orders and pumping blood back into the economy. Dominguez is hoping for a steady and moderate recovery in the next quarter, saying the worst is over for the economy after that steep slump we've seen in the second quarter. Now, electricity rates in Metro Manila dropped for the fourth straight month. That's with customers likely to see a 41 peso cut in their bills for the month of August. The continued drop in power rates is caused by a relaxed supply contract due to the impact of the pandemic. The utility giant said August's rate will decrease by 205 centavos per kilowatt hour to around 5.5 pesos per kilowatt hour. Meralco's generation charges likewise fell for 5 straight months to around 4 pesos and 12 centavos per kilowatt hour. That's mainly brought by lower prices at the WESM and natural gas repricing. Though this is good news for consumers, the pandemic caused Meralco to delay its planned competitive selection process, or CSP, to bid out 1,800 megawatts of greenfield baseload capacity. The Energy Department said Meralco requested to postpone the CSP and instead start the bidding process in October. Although the agency approved this request, they asked the power distributor to weigh its options and find other platforms to hold the process so that they will be able to hit their target delivery of power supply. Speaking of delays, the construction of the first phase of the China-funded Mindanao Railway has been pushed back to the first quarter of next year. That's as the government has yet to decide on a contractor. Last year, the Transportation Department said the railway construction will kick off by the first quarter of this year, but this did not happen. Transportation Assistant Secretary for the Mindanao Clusters Project Implementation, Amar Ehe, told Business World the department had received the shortlist of bidders for the project monitoring consultancy package of the rail works from the Chinese embassy. Ehe said the department is still waiting for the shortlist of bidders for the design and build package. Things are looking up, though, for the 1.6 billion peso Subic Freeport Expressway capacity expansion project, which is now 50% complete. And Lex Corporation said project construction is seen to be completed by the end of the year. Once completed, the expressway is expected to allow the faster transport of goods in and out of the Subic Freeport. It has been 5 straight weeks in the red for our local index, but it seems to be rebounding this morning as a reversal due this week. Here to share with us his insights on portfolio allocation given the recent indicators, we have with us First Metro Asset Management's Edser Trinidad. Good morning, Edser.
Good morning.
Sir, let's kick off with just general reaction and what you've been feeling when you're looking at the markets. We did see a slump the past 5 weeks after we had already rallied from those March 19 lows, but it does seem that there are some positive signs right now. Bargain hunting has been happening, and some reports that we've already hit the bottom. Do you feel that we've already bottomed out?
Well, actually, we were expecting a worse performance, specifically because after we've announced a worse than expected second quarter GDP. We were expecting for the worst, but the market has been relatively, I think, has performed better than what we anticipated. I think this is also an indication that of the high liquidity that the market is basically now experiencing. And this is the reason why I think investors have started to bottom fishing on certain stocks that have been, shall I say, been badly affected or badly, in terms of the share performance, has badly been battered during the past couple of weeks.
Sir, you said that it's actually not been as bad as you were thinking it would be. Is this because of the fact that the stimulus is actually making its way felt? You feel that there's actually real economic recovery happening despite the reimposition of an EMCQ in Metro Manila, and despite the fact that we've seen record cases, in particular yesterday?
I think it's more of a. I think in terms of they're just looking at looking forward to what will happen for next year. I think a lot of the investors have started to write off this year. They're already expecting, I think, the worst thing to happen this year, and they're looking forward for next year. In addition, I think they're also hopeful about the stimulus program that the government will be coming up.
Okay, sir, when we talk about stimulus here, they just approved, of course, the stimulus yesterday, but there's still a lot of analysts saying that's not enough. We still need a much bigger package in the trillions for a recovery plan. They've also slashed the infrastructure budget recently. What is the market's reaction to that, given the latest GDP print, which was much worse than expected?
I think, yeah, I tend to agree with some of the market analysts. There has been some questions about whether the stimulus program that the government is submitting is quite be enough to really bring back the confidence in the market. But at least, however, this is a good start to begin with, because unlike in the past, we haven't been any seeing some sort of some new developments on the stimulus package. But at least there has been some indications that's moving forward. Although rather, we would rather we would rather prefer to see a bigger package. But I think this is a good start to begin with. And definitely, while some may ask may ask some questions about whether this is enough, but at least this is going to be a good start moving forward, and at least we're seeing some developments happening on the fiscal side. Unlike in the past, there's a big impression that the central bank or the BSP is doing all the heavy lifting in propping up the economy.
So I'll go back to your monetary policy point later on. Just your reaction on what Governor Diokno said yesterday. He said that the reaction to the GDP fall was exaggerated. It's actually not that bad because the contraction is temporary. Recovery can come quickly, and we're set for a strong recovery. Is that what you feel? Because a lot of other analysts have said that they're repricing everything after this GDP fall. You've actually got HSBC now, above 9% contraction. The government's still saying it's around 5% contraction. So where do you stand in terms of growth? Is this a temporary contraction lang that was staggering, or is this a sign of even worse things to come that might spill over into 2021?
Yeah, I think the market hasn't really reacted badly. I think it's basically it's a natural reaction of all the market, as once they came out a worse than expected number, they have to readjust their forecast going forward. I think in terms of a recovery, it all depends on a couple of things, on whether how the economy will be able to reopen, and going on a lockdown for 2 weeks is not a good sign. And basically, I cannot blame some market watchers of becoming a bit pessimistic in terms of their outlook for the rest of the year, or at least for next year, because of the COVID-19 continue to prevent our economy from reopening.
Sir, how are we faring when we talk about foreign investors or just portfolio managers when they're reallocating their money right now? How are we faring compared to our other Asian neighbors, or ASEAN at least, when it comes to the earnings in the second quarter and the price of our index compared to those earnings?
Um, are you talking, or I think we're talking two different things in terms of asset allocation of foreign fund managers here in the Philippines. Unfortunately, we have in terms of our share in terms of the investment pie among the global investors universe, we're just basically a speck of dust in terms of the
Right.
size. I think that's the reason why, a lot of investors we've been seeing a net foreign selling for the past
Mhm.
couple of months. As in terms of their total portfolio, the Philippines is just small. And
Mhm.
as a foreign fund manager, or as an asset manager looking at the global scale, they would just prefer to focus more on the stocks or on the markets that they have a high concentration. So that's the reason why they're willing to let go of the Philippines. But in terms of earnings,
Mhm.
I think second quarter earnings, Philippine corporate earnings are not basically far from what the other companies in the region have experienced. I
Okay.
think But well, unfortunately, I think um, some there are corporate earnings may have been slightly more affected because
Mhm.
we have a longer lockdown as compared with the other economies in the region.
Sir, what about the strength of the peso? Are you surprised about that? It's at an all time, well, not all time, but 3 year strength here. It's hit 49 already. Is that not encouraging investors to come here?
Um, Not necessarily. Actually, a stronger peso is double-edged sword. It can be positive because it can be seen as at least the purchasing power of those that are looking at importing will be cheaper for those that have they're looking to import. But it's also negative in our economy because it may also be detrimental to our OFW
Remittance.
compatriots in terms of remittances. So again, a stronger peso may not be good at all
Mhm.
because there are certain sectors that also depend on a weaker peso.
Okay, so it's not very black and white here. So let's talk about two specific sectors that are in focus today. Kicking off with construction and what I had reported earlier in the markets. The government has been banking on the infrastructure play to be the saving grace, let's say, of the economy. But now the construction players are saying that despite the fact that lockdowns have been lifted, they've had such difficulty in continuing at the same pace that has been expected. Are you seeing a spillover here in a contagion towards other sectors like cement players or even properties?
Definitely. First of all, I think the construction companies will face a lot of challenges before because they also have to put in some safety protocols within their workers in order to at least protect their workers from getting infected. Second, there's also a challenge in terms of their logistics because of trying to protect your workers. You also have to improve your logistics in order to provide a smoother operation based on the new normal. So definitely, construction companies will face a lot of challenges, but at least as the government has mentioned, that is one of their key focus in terms of the spending. So at least once these construction companies will be able to overcome those challenges, then at least they're much better off. But I think in terms of the effect on property, yes, definitely it can affect the completion of their projects, but it can also, in a way, be able to help property companies to really, spread out the completion of their projects in order to at least allow the market to absorb the new capacity that will be coming on from the completion of those projects.
Okay, so quite some challenges for the sector, but you do believe the government has that as a priority sector that they might actually be assisting. Now, finally, sir, on the telco space, a lot of issues were in focus, especially when President Duterte and his SONA addressed specifically singled out the telco players. The stocks actually tumbled after those remarks, but it's also spurred the LGUs to speed up, the process. What is your outlook now on the two incumbents, or at least in the telco space in general, given that there's a lot of regulatory risk on the table, but they're also actually the ones that can be the star players during this time?
Yeah, I think the regulatory risk is basically there's still, it will remain to be concerned. But I think telco is one of the few bright spots here in our market, as we expect that earnings will continue to be resilient in this kind of pandemic, considering that as more companies are starting to, initiate work from home guidelines. In addition, the our schools will basically be opening based on a more online setup. So this should benefit the telcos. In addition, the fears of a third player coming in will also be delayed, considering that the third player would have some difficulty or challenges in rolling up its network because of this pandemic, as it will be more difficult for them to lay out towers and lines in order to, in a way, abide by their target of operating within a certain time frame.
Okay, so a good sector to be in long term, but a very difficult one in terms of capex. Just interestingly, on the terminal, you could actually see Dito Telecom up by 5 and 4 tenths of a percent this morning. So very interesting points there, sir. Whether they can actually use this infusion into actually rolling out those networks that you were saying will be very challenging in this period. Thank you so much for those insights. That was of course Edser Trinidad of First Metro Asset Management. And that's a first look into the business day. Today is Tuesday, August 11, 2020. Catch us again tomorrow morning, 10 a.m. I'm Danie Laurel, and we are One News.